There are just 2 weeks left in 2021, and you may be thinking about making some donations during the season of giving. If so, knowing how to make your RMD a QCD could help you save on taxes in the process. Hello once again, I'm Scott Inman, and thanks for watching this week's Fastest 4 Minutes in Finance. Well, the financial industry loves its acronyms, and we're talking about 2 of them today that are very related. Let's start with the RMD. You may have heard of this one. It stands for Required Minimum Distribution. If you've made pre-tax contributions to a 401k, IRA, or other retirement account over the years, that money has been growing tax deferred. It is taxed when it's withdrawn from the account, and the IRS requires that you take a small portion of it after you turn 72 years old. That portion starts out at about 3.9% of the previous year's account balance, and it goes up every year after that. The distribution is taxable as ordinary income, meaning if you had income of $50,000 in any given year and your required minimum distribution is $5,000, that means you just made $55,000 for that tax year. Now, many of our clients begin taking distributions from their retirement accounts immediately when they retire because they need it or want it to spend. But if you don't need the money, you may not really be looking forward to paying taxes on the money you really don't even want to withdraw. If that's you, you may want to consider a QCD. Now, that stands for Qualified Charitable Distribution. These can begin at age 70 and a half and must be made directly to a qualified charitable organization. That means it can't go into your bank account and then you write a check to the charity. A QCD is excluded from your adjusted gross income. Now, there is one requirement. You cannot make a QCD from a 401k or other corporate retirement account. It must be made from a traditional IRA. The funds could have been originally contributed to a 401k or other employer plan, but they must have been rolled into an IRA before they can be distributed as a QCD. Now, another advantage of a QCD is that you are not restricted to the RMD amount. The individual IRA owner can withdraw up to $100,000 annually as a QCD. Each spouse can give up to that amount too, for a total of $200,000. The tax savings can be significant, especially if you have significant earned income. It could also even help keep your Medicare premiums lower. Now, you should discuss QCDs with a financial advisor to find out if they're right for you, and any tax questions should, of course, be asked of a CPA. But if you're in the giving spirit, this method of giving could give your favorite charity an added boost during the Christmas season. Thanks for watching.